Good morning, traders. Welcome to Wednesday of this beautiful week. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before we jump on in, as always, we need to check the news, see what's going on, when it's going on, etc., so that we're not taken by surprise by anything. So looking at the news calendar for today, starting off, we've got the first batch of news happening at 8:30. That's the building permits for February, forecasted at 1.75 million. Previous was 1.886. We also have crude oil inventories today for Wednesday at 10:30. The forecast is 2.964 million. Previous, 13.798 million. We'll take a look at the API to give us a slightly better idea as to what to expect for the inventories there. As we go on through the rest of the day, we can see there's not a ton until we start getting into the afternoon session, and at 1400, we have the FOMC economic projections, FOMC statements, and the interest rate decisions, which are forecasted at 0.25%. Later after that, at 14:30, we have the FOMC press conference as well. So today is FOMC day. We've got a lot of stuff going on, not to mention that it's quad witching. We've got like everything happening all at the same time this week, which typically means that it's going to be a little bit of a gross one. And as we get later and later into the week, the harder and harder that's going to get. Taking a step back and looking at crude, though, if we look at the inventories, first off, the crude oil inventories for today are forecasted at a positive 2.964 million. If we go back to yesterday's API reports come out at 16:30 on Tuesday. That was forecasted at a negative 1 million. So this came out significantly better than expected. And I say significantly, I know negative 1's not really that big of a deal, but negative 1 compared to the last few that have been like negative 27 and negative 12 or whatever, or positive 12 and positive 12, all these crazy numbers, a negative 1 is actually pretty good. So that'll be interesting because as we go into today's inventories are forecasting they're forecasting a positive 2.964 million, which is fairly close to what the API was forecasting, which gives us an idea that this is going to be a negative number and potentially even slightly bullish, something to keep in the back of our mind. Aside from that, though, there's not really much else news, except for obviously the FOMC stuff, which we have to be very careful for. So with that out of the way, now we can jump into some charts for today being 3/17 of 2021. First up to the list is going to be the NASDAQ with this continuing wider channel that just keeps kind of chugging along. We still have a long way to go until we get to the bottom of the channel, but we did at least rally back up and completed the top. So now that the top is done, we cycled off of almost 13,300 and very quickly dove all the way back down to where the market's going sideways at the moment. Fairly obvious that we are stuck on a bit of a shelf of support here, floating around the 13,100 area. And if this starts breaking down, which it's expected to be fair, the downside objective would be back to the bottom of the channel. And if they're cycling off of a positive half DP down to a negative half DP, I know this is across several days, but it has been very slow, that would be, generally speaking, about a dynamic 1 DP move. So from the top to bottom, they are starting to at least pick up speed a little bit, but this is giving us a big clue that the market is still very slow. We haven't had any big moves up, any big moves down, and even yesterday, nothing happened until like 9:30. Once 9:30 hit, then it sparked the move all the way up to the top. Today seems very, very similar. And then we move over to the S&P, which is in obviously a similar situation, but more of an ascending wedge, which attempted to break out of the highs and totally failed. With a failure on the breakout above the highs, that's a big concern. But more importantly, what happened on that failure? This is where all of the extra information comes in. Because as we're coming up to the highs, right, the concern is when they're breaking through a level, well, was that level even there, right? Was the wedge high even there well enough to hold the market down? This is where we have to go back contextually. Held resistance twice inside there, held resistance again. When it broke above, it acted as support for a couple times, broke back down, acted as resistance, and then acted as resistance again. So even though the market did break above that level, they did break back down and hold the inside, which would suggest that it's still there. So as far as downside momentum, looking for the bottom of the wedge, which isn't too far away, and given the fact that we've blown off the top of the wedge, you would expect to see them blow off the bottom of the wedge, kind of an equalizer move. And that equalization would, well, I mean, if we look backward, we've got a two-legged correction move back. Well, it's not even a correction. A two-legged continuation move move back to the upside. Well, better spot than coming back down to where that middle point was to try to reattempt the bulls back again. And, you know, maybe they'll be able to line up another rally. And then next over on gold with the continuation of the spike and channel to the upside. Still grinding higher, not really doing a whole lot of anything, but the one important thing that does stand out is the major swing from before. This is the one that the sellers were trying to continue this drive to the downside and got absolutely obliterated on. Knowing that those sellers got shattered on the way, that's very important to see such a horrible new high. It poked above the highs, immediately failed back down with actually almost equal strength as far as when it went up to down. That is very much a twin reversal failure. And when you have a twin reversal failure, it's important to keep an eye on the inside swings. We've got the previous inside swing high and the large inside swing high. So far, the shorter one, the narrow one, is acting as resistance. The next one above that is going to be here. So long as the market stays underneath this, sellers have a chance to push this back down pretty aggressively to try to grab that L2 back down at 1725s or so. To be fair, it has tested very, very nicely. It's already had its rally to the upside. It's already had it to the tick bounce. It's only been a one candle test. That's it. So there's obviously some strength here trying to get back to the highs. It's just there's not a whole lot of action at the highs, and that is where the concern starts stepping in. Then over to crude oil with I mean, honestly, it's not really doing a whole lot of anything. We're still stuck in a wedge. Market's just kind of stuck inside yesterday's price action, although it is seeing a bit of a dive down. Nice ramp to the upside, and now seeing some pretty aggressive bearish movement. The zone of interest is going to be the inside swing. That's the place where they last failed miserably off of, and we are coming into today with an assumption that inventories may be slightly bullish. So given the fact that we are coming into a slightly bullish inventory, we've got potential support coming into play, we've got diverging lows all the way across the bottom. Even if it does break lower, chances are we're going to more likely see some type of a wedge bottom, which means that it's not going to go a whole lot further. Once it finds support, bounces back up again. So this is going to be a fairly interesting area. Buyers are going to be trying to buy low with the assumption that inventories should prop prices up and push markets back up. But well, the inventories over the last couple weeks have been absolutely horrendous. I'm not so sure one inventory week is going to be enough to change things. Over on the euro, we have just a monster dive yesterday. Fell off the highs around the 19,700s and just dove all the way down to 1950s before finding a bit of support. There's still a huge amount of divergence across the lows. We're not really finding any major zone of support, but if we take this high, transpose it to the lows, we do find that the buyers found support there. And the fact that we're coming in off of a higher low in an attempt to reverse higher, we can definitely see buyers are trying to give this a shot. So long as it stays above this higher low, those buyers have a shot. They want to keep that going. We're breaking above the highs. We've got the early stages of a trend reversal, but in order to actually get a confirmed swing break, they're going to have to break all the way up here. That's the only problem with that gigantic dive to the downside. So bulls, they've got a heck of a lot of work cut out for them if they're going to try to reverse this. At the moment, sellers are still going to be looking for reasons to sell anywhere that is applicable, especially given yesterday's slide down. I'm just not so sure that I want to be a seller after seeing a failure, big failure, rotation back up. Just not giving me the warm fuzzies of wanting to be a seller. So even if it does go back down, buyers are going to be more interested in looking at picking up the lows of the channel anyway. Then switching gears over to Bitcoin, which is finally pulling back a little bit after piercing through the 60,000s, made it all the way up to about 61,700s or so before backing off of the highs and diving quite a bit further down. Realistically, again, just like we've talked about on crypto for a long time, buyers just don't want to buy high. This thing has been nonstop to the upside. Traders are looking for value. If we look at the overall pullback moves since this kind of rally up started, we had some nice deep pullbacks that kicked it off. But as soon as this thing broke out above those highs, right, that confirmed swing, we shoved above that confirmed swing, and it was L1 pullback, L1 pullback, L1 pullback. Finally got a dive down into L3. This is the deepest pullback they've had for quite a while. And if we look at this from a value perspective, this last drop from top to bottom was about 12.25%. If we look at this drop from the top to the bottom. That gives us about 13.8%. So as far as a value perspective goes, even if we're looking at 12.25%, which puts it basically right at the top of L3, valuation buyers are buying down here with the assumption that it's going to be very low risk, but potential for huge reward all the way back up to the highs. It's just a matter of kind of having to wait for this thing to turn around, because from a structural standpoint, it's really not following along anything structurally very well, aside from these larger L3s and all of those. And then finally over on Ethereum, which is kind of the same situation. There's not really a whole lot of structural price action. It's just a ton of back and forth. 1800 down to 1750, 1800 down to 1750, 1800 down to 1750, over and over and over and over and over and over and over again. Realistically, right now, we've got to get away from this. This is a friggin' mess. The big zone, 1750. Not a surprise. 1750 has not been a small zone. We've been struggling with this level for, well, since it's tested it. It's been a big zone. There's been a lot of volume transacting here, and it's not done. We're still holding support, and as long as the buyers are staying above it, they've got a good shot. But the problem is, well, they're challenging it a lot. There's a lot and a lot and a lot of testing on this zone, and eventually it's either going to have to work and get the market away from this, or it's going to have to fall and find better prices to reload more buyers at a better zone so they can build their defenses. Because right now it's just, we're stuck. It's not moving away from the 1750, and it's just hanging. Alrighty, well, that's going to do it for today. Like we always say, stay safe out there, keep those stops in play, and let the winners run. I hope you have a great trading day today, and we will see you all in the next. Thanks.